Evening and welcome to Realty Coffee Talk on Awaz Entertainment. My name is Tahir Qureshi. I'm a fellow of Real Estate Institute of Canada, broker of record for City Pro Realty Inc. brokerage, and also principal broker of Canada Express Mortgage Inc. license number 13241. Tonight's topic is about affordability and mortgage rate. A rapid increase by our Bank of Canada rate has put a lot of pressure on home buyers who want to buy a house, particularly the first-time home buyers. Also, the renewal that are coming for the people who are going to negotiate a deal to make sure they can afford it, and also those who have taken the variable mortgages and mortgage interest rate has gone up now for variable. If a prime was supposed to be 2.45, now it is 5.45 for variable mortgage if you have an equity line of credit. So there is created a lot of tremendous challenge and how we can find a solution for these changes and what's happening. And there is a potential for two more interest rate increase in next third quarter before we end of December 2022. So how people are coping with it, how this is going to become an issue. Recently, I have a client, well-established client, and they have a valid income, but because of this criteria, I just wanted to talk about how you calculate the criteria. Simple rule is that OFC rules will qualify you based on 5.25%, and then you add 2% for your risk. They qualify you. Now, in contract terms, if the bank give you a specific rate, they need to add, it's called contract rate, they need to add a 2% contingency. So if if variable rate are escalated and you have to add extra risk to make sure you can afford it. So I was talking to a banker about arranging a financing for my client, and he was saying 5-year variable fixed is 4.95. Some banks may give you a little bit reduction. So you are looking at a carrying rate of 4.95 or maybe discounted to 4.85 or maybe 4.8 for the best clients. But in order to qualify the threshold, what you can buy, they need to add 2% on top of that. That means they're going to qualify you at 6.95 or 6.80 to qualify it. And this is where the big challenge is. That means your value of your purchase power will be reduced. So every $100,000 that you borrow, every $100 you borrow, 100,000 you borrow, you will reduce about 40%. That means every 100,000 you will be paying monthly approximately $40 more. So if you have $500,000, that means you're talking about $250 per month additional cost to you to carry the mortgage. So, and it goes with the various scenarios depending on what rate the lender is giving you or the bank that you have agreed to work with is going to give it to you. So what is the simple solution that we have? We, is very important is when people are losing jobs or you have a new job, you need to have a history of 3 months. And this is why the existing lender you have worked with before will have a history of you, and they will be more flexible to you in terms of supporting you. But the important thing is, it doesn't look simple because they look at your rates and you won't qualify if you don't have a good income. So this is very important that you will have to be qualified prior to doing a buying decision, or if your renewal is coming, or you have affordability issue with the existing one, you need to talk to the lender and see where you fit. What is the best solution before you renew it? It's not that you will have to go ahead and sign it. You have to calculate and how long. My predictions are before it will take you about 12 months, so maybe another 18 months before it eases the interest rate in the marketplace and becomes a more of affordable. This cannot continue, even though we have inflation that came down to 7.76 or 7.61, something like that, from based on the Bank of Canada report. But it's not helping it because cost of borrowing or cost of carrying a house is increased. Now, you look at the certain things is that when a carrying cost, if you anticipate there is no appreciation of your value for the next year or so, and you are losing the equity and you don't have too much in equity, you have to really think twice before you're renewing it, signing up for the new one. If you have a bigger home, you maybe have to dispose of and downgrade before you reach a point of no return, because these expenses of paying the mortgage or paying equity line of credit or loans are going to continue to grow, and your income declines, it becomes an issue. And the other solution is that you might want to extend the amortization period. They allow up to 30 years. Only thing is, it will extend the period and you will be paying more interest on it. The most important thing you have to remember is that when you have a variable mortgage, lender wants to see, are you still maintaining the balance between the principal and the interest? If your payment eating up more money toward your interest, there is a less and less contribution to building your equity, and you be concerned with that. Is the best thing is to call your lender, talk to them, and see if it's workable for you. The best solution would be to create more source of income. That means you may have to do multiple jobs, multiple things, therefore to generate revenue to sustain this most difficult and challenging time that we have. So it is great time for the buyers, because you remember I was sharing with you a report for real estate in our August report. Our active listing is 62.3% as compared to 57% in July. And this is the August report that I shared with you with the Market Watch of Toronto Regional Real Estate Board. So it's important. Generate more income. And why the bank or lender will give you the money is they see a steady income that you have. As long as you have a steady income, the lender will give you, and they work with you. And if you have longevity relationship with the lender that you are maintaining currently, you will have some leverage to speak to them. They'll be more sympathetic to you. But you must pay your minimum payment. Remember, during the initial stimulus package from federal government, the bank was told to stop payment for 6 months, and people have took advantage of that. That option is no longer available, that means you need to talk to the lender to make sure that you are able to afford it. Why you want to lose your equity if you don't have the money to pay the future payments? Because you may have to pay for the car, you have to pay for the Visa, MasterCard, like anybody. Like we all have these liabilities, paying student fees for the kids, mortgages, insurance, auto insurance, car payments, and debt on business cards, credit cards. These are all liabilities. And when you are talking to the mortgage broker and you update them, and this is very important. The other thing is that if you're not able to generate income, you might have to ask someone to sign a co-mortgage with you. We're going to continue our conversation. We'll take a short break. You're watching Realty Coffee Talk on Awaz Entertainment in Canada, around the world.
खूबसूरत और दिलकश ज़ेवरात का बेमिसाल मरकज मक्का ज्वेलर्स आपकी खुशियों में बराबर की शरीक, जहां आपको मिलेगी आपकी पसंद की कंगन, चोकर, सतलड़ा, झुमके, चंदनहार, बेशुमार डिजाइन की अंगूठियां और चूड़ियां। तो आज ही तशरीफ लाएं 7086 एयरपोर्ट रोड, मिसिसागा। आपकी ज्वेलरी देखकर लोग यही कहेंगे, मक्का ज्वेलर से लिए हैं क्या?
Welcome to Pak Homes Builder Incorporated. We design and build custom homes for landowners, low-rise condo buildings, plazas as well as the industrial sector. We are a registered builder, vendor with HCRA to build homes across the province on Ontario. We provide Tarian warranty in accordance with Ontario New Home Warranties Plan Act.
We build your dream home.
Call us today at 905-904-5353.
Shawarma, now serving from 4 locations.
KK Travel believe in providing everyone the first-class customer service. We take care not only for your air ticket, but dignity and respect as well. We are available for you anytime on WhatsApp, even while you are in Pakistan or any other destination. KK Travels guarantee lowest prices and are open to price match any airline.
We are KK Travels under supervision of Gas Khan at 905-367-9433 or visit www.gaskhontravels.com.
डिक्सी इलेक्ट्रॉनिक्स और अप्लायंसेस पिछले 16 सालों से खरीदारों की खिदमत कर रहे हैं। हम लगातार 4 सालों से खरीदारों की पहली पसंद बने रहने का अवार्ड हासिल कर चुके हैं। हम किचनर्स, बॉश, वर्लपूल, एलजी, सैमसंग और जनरल इलेक्ट्रिक के ऑथराइज्ड डीलर हैं। 5 स्टार खिदमत का लुत्फ लें। हम आप सभी को टीवी सबसे ज्यादा रियायती दामों पर देने की गारंटी देते हैं। www.dixieelectronics.ca हमारी वेबसाइट पर जाएं या अभी कॉल करें 905-625-5900। सभी बहुत ही मुनासिब कीमत पर दस्तयाब हैं, जो आप बाआसानी से ले सकते हैं। At Dixie, we sell quality and deliver confidence.
Zoc. Now it's fully renovated. Live catering, barbecue, tandoor, जलेबियाँ और fresh naan. तकरीब आपके घर में हो या घर से बाहर, Zoc is providing full service now, and Zoc has opened a new banquet hall, garden event center. आपका Zoc देखकर लोग कहेंगे, क्या Zoc है आपका? Call right now 905-625-7786. Zoc. ज़ौक वालों के लिए।
Good evening and welcome to Realty Coffee Talk on Awaz Entertainment. My name is Tahir Qureshi. I'm a fellow Real Estate Institute of Canada, broker of record for City Pro Realty Inc. Brokerage, and also principal broker and president of Canada Express Mortgage Inc., license number 13241. Today, we're talking about affordability and mortgage rates and how it's going to affecting people. So in order for you to qualify, I will tell you to go to my website, city-pro.net. Under buying or selling, click on the drop box and select the calculator. There are 4 calculators there. One talks about Canadian mortgage housing fee if you are buying a high ratio mortgage, less than 20%. Then your affordability and what you qualify, and also your land transfer tax. This is very important, very easy. Privacy of your home, you can do that. Now, let's go back again. The most important thing in arranging a mortgage and financing is to have your down payment. You have your notice of assessment from CRA. You also have a T4 or T4As. So all sources of income. And then you also own a property. That means those are capital asset. Capital asset. That means you own a property that has a value. It has appreciated. You have built equity. So when you go to a broker, mortgage broker or agent like me, they will assess you, know your client. That means I have obligation to see, do I know the history and background of my client and information that I have collected. And then it's called suitability. That means a product that is being offered as a variable fixed mortgage, depending on the loan arrangement, line of credit or mortgage, how suitable that offering is for a buyer client or a seller who is renewing the mortgage. This is why it's very, very important that you think about that. So it's very important for you to think about that what is important that you can do in order to achieve a affordable mortgage, a rate or a type of mortgage that you can assess and secure a financing. Right now, the variable is the most recommended, because if in a 12-month period, 18 months, it's not going to continue the way it is right now. It's not possible to continue like this, because you're going to have an inventory of for sale property sky high on MLS system. And that means nobody can afford to buy it. And those sellers who are desperate to sell, and they will be giving opportunity to those who have managed their financials properly. There will be opportunity for those in November and December to go and take advantage of that. In terms of language that we use, advantage, in real estate, we feel fair and reasonable. But advantage is for those who are able to give no financial condition and buy the property. They do the home inspection. They're well prepared and negotiate. They can do early closing because they're planned. They have a wealth manager working for them. They have an asset. They can pay cash, or they will arrange financing already before they put the offer. So whoever is well prepared financially is the one who's going to take advantage of the situation, because inventory will grow. And if we have another increase coming up in November and December or October, believe me, we will have a lot more properties for sale, and this is becoming more of a buyer market. Now, if you are asking someone to sign a loan to rearrange mortgage, that means you need to understand the person who's going to co-sign with you will be on the risk, because if they co-sign a mortgage for $500,000, they cannot buy that $500,000 home for themselves, because this will be registered on the title. It will be registered, if some banks may allow it not to register on the title, but they will be committed. It will be shown on your credit report. So therefore, it's very, very important that you think about that very thoroughly. It's your home unless you have willing to share equity or create a partnership with your friend or a family member or any business partner, instead of losing your equity or home. And you can discuss your financial arrangement to make sure you qualify. Some of these mortgage people who have insurance for to cover the risk, but there is a very specific risk in a short period of time. Depending on the condition of your mortgage, insurance will cover a period of time depending on the terms and conditions. So you look at that the area, and then also look at the scenario. You have any saving and any other sources that you can help reduce the value or the amount or the mortgage or the loan you have. Sometimes parents give you a gift, you can take a mortgage from them. Most of the parents who are spending money for higher education to sending postgraduate education, doctor, engineering, law degrees, and they're borrowing money to support their kids until they start making money and they will take over the line of credit. But you still have to pay the mortgage. If you had $300,000 mortgage and you have a prime rate, you were paying about $300-400 a month. Now with the same amount, you are paying almost $1,200 to $1,300 a month. Amount is the same. The rate has doubled, more than the double amount. And these are the contingency that we have to plan and handle it. Don't be afraid of making tough decisions to buy it or sell it. If you are well prepared, you have financing, go ahead and buy it. This will be an opportunity for you. But if you can afford it, don't be shy. Don't take the emotion out of it. Put them up in the property in the market and sell it. Hire the professional, because we have a couple of episodes already on it, how to sell it, how to choose a real estate professional to help you. I am a fellow of Real Estate Institute of Canada. Fellow of Real Estate Institute of Canada. I am a certified real estate specialist. I'm a senior real estate specialist. If you are a 50-plus senior person and will have an asset, you need some guidance, I'm fully trained and licensed and have a designation to help you. And seller representative. I'm also certified seller representative specialist, and accredited buyer representative. I'm also accredited buyer representative to help buying and selling. And as you know, I have a global connectivity network around the world. I am a certified international property specialist, member of NAR. This year, I'm in November, I am going to Orlando to meet my fellow global partners who have joined my group on social media and Facebook. They participate. We do a presentation every month consecutively for the last 18 months. Our 9th episode conference, connectivity conference on real estate, is coming on 22nd of September at 1 p.m. Eastern Standard Time. So if you are a CIPS watching this TV show, join my private group on Facebook. It's called Global Real Estate Professional Network for CIPS only. Thank you for watching. Now, also, the most important thing that you have to remember that you can talk to the lender directly. You have obtained a mortgage through lender and through the broker or agent. You still have the right to go speak to the lender directly. Speak to him or her, and make sure that you explain honestly your conditions and get their advice. And you can give me a call. Talk to me. I'm a principal broker of Canada Express Mortgage Inc., license number 13241. I have many episodes that I have shared with you, and make sure that you follow them. We are strictly follow laws, and we are governed by FISRA laws. A regulator, we follow very strict code of ethics when we're dealing with our client, because this is why suitability of a product that we offer to our client, or create a know your client information. There is a 4 or 5 pages of information you can download from fisra.ca, where you need to discuss the details. It goes so detailed about your grocery bill, your clothing, your gifts, the happy birthday gift, and medical expenses, student loans, your travel arrangement, everything to create your GDS, gross debt service ratio, or TDS, total debt service. The difference between the two is the TDS will include all your student loans and all the taxes and everything. GDS is about 30 to 32% of the total income, gross income you have for the family. Your TDS is about 40 to 42%. When you meet or exceed this TDS or GDS role, it affects you, believe me. And this is very important to be a prudent and follow your advice of professional. Only talk to licensed practitioner for the real estate or mortgage. You will get advice. We are well trained. We do continuing education every year before we renew our license. You are watching Realty Coffee Talk on Awaz and TV. My name is Tahir Qureshi. I look forward to see you next Thursday at 7 p.m. on Awaz and TV in Canada, around the world. Bye for now.